Hello everyone, welcome to the stream. Today we are going through the best dividend paying stocks. Let's go through the list, and this is not a investment push, just for your knowledge. Go through the list and see whichever suits for your portfolio, add it to your portfolio, and this is just for a guidelines guys. Just go through this and do the investing money in your own due diligence because it's a hard earned money, so do your own research. So let's get into the video. Okay, let me open the screener, and yeah, I hope you guys can see the screener. So the first stock in this today's list is Coal India. So let's go to Coal India and see what's the valuation. So the important part in this video is that I am showing you the best dividend paying stocks as well as they are debt free, so you can invest them with risk free, so there is no more debts in the company, so that you don't get into any trouble. So I have made basic all the basic filters so that these are good stocks and verified, and there are no issues buying if you are buying it. But this I'm repeating it again, this is not an force to buy thing, it's just for your knowledge and see how to pick a stock also. This is about learning the fundamentals, so every time you go through this you will learn the fundamentals, see how to analyze a stock. So let's go through the stock. If you see the market cap of the company is like 2,45,770 crores, so it's a big company, and the current price is 400 rupees. So it is only just 0.67% down from its all-time high, so I would not suggest you to buy in a bulk buy because it's in all-time high. It might correct well, so it's good to buy in chunks, like if you are doing a sip on dividend stocks, if you want to add this stock in your portfolio, just add few of them, this will help a lot. So its debt to equity is 0.09, it's almost like nothing, and P ratio is 8.78, which is less if you see overall to the stock market, but not according to this particular stock. This particular stocks usually trades at very low PE, so just don't go through. See, this is the important part. Like if you see theoretically 8.78 is very less PE, but if you see the particular industry or the particular domain, this amount of PE is very high for this now. So let's see, there is no pledge and intrinsic value is around 1000 rupees. So the intrinsic value shows that this stock can still move up very well, and book value is 103 rupees and it is close to its all-time high. And the important part is it gives you around 6% of dividend. So this is a high level of dividend yield when you compare the risk involved in stocks and all. It's very good to have these stocks in your portfolio. Let's go and see the chart of the stock. If you see the stock chart, it has traded from last 3 years around 220s and all. But when the markets are up, like when the Nifty started moving up from 232, it's almost reached 400. It has doubled in almost from 4 5 months. It has doubled. So I would say it's not a great entry point. But if you are starting out, if you are doing sips and all, it's good to enter. I'm still telling you guys, it's not too good. Like if you are going for a bulk buy, it's not a good strategy over here because it's in all-time high. It might correct 20 30%. So it's better to start with the sips, like whatever you are buying in a sip, just add few quantities every month. And if you are going to do a bulk buy, the first entry level would be 270s or 280s. Around 270 to 280 would be a good point because that is where there is a little support. If you see, other than that, if you are getting the stock around 220 230s, it's the best time to enter around 230s. If you see, there is almost a year's support as well as resistance here, so you can let's see 3 years back. If you yeah, that's a good point. If you see in 3 years, it is that 200 ish is the best point to enter in this stock, so that you are getting the stock at a good valuation. So yeah, this is the first stock in the list. And the next stock we are going to show is VST Industries. So VST Industries also pays a very good dividend yield. If you see it, it provides you around 4.13 dividend yield. It's a great company, and if you see its intrinsic value also, it's around 3,500. It's close to its intrinsic value, and the best part is it has fallen by 15-16% from its high. So it's best time to enter in this stock as it's fallen, and the debt is zero. And if you see ROE and ROC and all, it's 29% ROE and ROC is 38. Even the P ratio is around 18. It's a good stock to enter because now it has fallen by 15-16%. So in a year you might get this 15-16% quickly because it is trading less than its normal range of the stock. If you see, it's trading around like whatever you were getting in 2021, it is almost there like 2-3 years back. This was its all-time high, so you can buy it at this. And one more part, guys, this is in the cigarette industry, the tobacco industry, which is very highly regulatory of the taxes and all. So that could be one reason, like these stocks, the ITC and these VST industries and all are in highly strict regulatory policy. If some government changes the tax rules, it gets affected to them. So yeah, when you are doing the SIPs, be ready for a long tenure because sometimes when new regulation comes, these stocks get highly corrected like 20-30%. So this is the issue with these industries, but it pays out you very well dividend. If you see, the dividend yield is around 4.13. So it's good. And if you want to accumulate this stock, yeah, you can start accumulating this stock at this point. If you are going for a bulk buy, I would say less than 3,000 rupees would be a great point to do bulk buys. If you see, that's the range of the stock. The low of the stock is around 3,000, around 3,000, 2,900, 2,800. That is the point. If you are going for a bulk buy, that's the entry point. If you are doing a sip, it's good time to sip. So the important thing is Nifty is almost close to its all time high. It has went 22,000 and it has come back, but it is close to its all time high. So now anybody who is coming freshly to the market, don't try to invest in a bulk buy, because bulk buy would see, if you enter tomorrow itself, market may fall from 10 to 20%. In a week it might fall, in a month. So you never know when will the market falls. So it's already in all time high, you won't even get the hope that it will come back. But when you buy at the bottom, you know that it will go up again. It's like you buy at 100 rupees and it comes falls to 90, you lose 10%. But in fact, when you buy at 90 and it goes back to 100, it's not 10% you gain, you get it more, because 90 to 100, it's not 10%. Just think about it. That's the important part. Like when the correction comes, that's when you have to buy in bulk. Now if you're doing, just do the sips and try to keep a small amount like 10-15% of your money, like every month sips money aside. Just start accumulating in your savings account, which you can buy quickly in the market when there is a huge like 20-30% fall in the market. I'm expecting a 10 to 20% minimum fall in the market in upcoming 6-7 months. After the elections, after Feds cut their interest rates, the market will go up. After that, market should correct because it has already started giving a huge run up. So when the market gives such a huge run up, guys, so the issue is it needs to get corrected. People need to book their profits. Everybody likes to take their profits out, so you should be very careful in this matter. And the second stock is HCL Tech. So let me go to means the third stock is HCL Tech. Let me go to this HCL Tech. So HCL Tech, as you guys know, it's an IT based company. These companies work on service based companies. Like these give services to the companies. They have their own HCL product also. So it's a great company to invest. If you see, it is down 4-5% from its all-time high. This is the important part. Just see that downfall. You can get only 4-5% up. the risk is like the market may fall 10 to 20% in a quick run, because from 18,000 market has gone to 22,000. There is no 4,000 rupees. The Nifty has moved from 18,000 to 22,000. There is a 4,000 rupees quick run up. So there is no support in that range. So if the market might correct to 20,000 or 18,000. So market might easily fall till there. So the risk appetite is like around 10 to 20%. But even if it goes up, you are getting only 4.6%. So I'm telling you, these are the way you have to do fundamental analysis. See the market cap. If the market cap is good, see the current price and see how much down it is from its top. See the this is just 4% down, so it's not a good time to buy in a heavy quantity. Just do a small amount of sip, wait. If it falls again 5-10%, buy it for 5-10%. If it goes up, just start doing small accumulation of this stock. That's the important part. This is the third stock. And even if you see the promoter holding is good, it's 60%. If the important thing is, if the promoter holding is above 51%, right, the promoter can make a good decision and they can stick to that decision instead of having a less promoter holding. Will might be there is a conflict in decisions. This is avoided because the promoter holding is 60%. It is great. Even ROC ROE is great, like 28-23%. Yeah, if you see everything is good, and the dividend yield is 3.37. It's extremely good dividend yield. So yeah, if you see the P ratio also, P ratio is better now. It used to be 33 and all. It is still more than its median P. Median P is around 20. It is around 27, 26. So yeah, it's not a good time to bulk buy, but it's a good time to enter the markets, as markets are giving run up, right? It's every day is a good day to enter a market with the small amount, but not invest the entire amount in this. These are good stocks if you want to have a good stock in your portfolio. If you see the pros and cons of this company, right, all are just pros. There are no cons in this company. So yeah, it's a good company to invest. This is the third stock. And that fourth stock of this list is National Aluminium. National Aluminium is also a great company. Like if you see, it is like 6% fallen from its high. So yeah, you might get a quick 6% run up very quickly. And intrinsic value is around 100 rupees. Even the book value is 74, and the current price is 135. Yeah, it's a good buy if people who like, usually when new people come to stock market, like new bees, they like to have more number of quantity. They want his stock 100, below 100 rupees, below 200 rupees, below 250. So if you are looking for such a stock, it's one of them. Like you are getting it for 135 rupees, you are also getting 3.5% dividend a year. That's a good amount. Even the company is good. So it's it is down from 6%. Again, I will tell you, it's not a bulk buy time in this company, because if you see, there is no support at all. The first support, if it starts falling, you might see a small support at 123, and there is next support at 110, like 13 rupees, like if you see, the first support is around 23 rupees, like 11 rupees difference is there. First support, if you miss that, again next is around 115. That is like 20-26% the money, like around 20% fall will be there. Even if you miss this, next support comes around in this range, like 100 to 35. So buying a bulk quantity is not a great decision in this. If you start accumulating like few quantity, like few percentage, like if you are doing a portfolio of a dividend yielding stock, right, so you can add few of this quantity also. Like I'm telling you again, the markets are at almost at its high. It's not a great idea to buy a huge amount of stocks. Just buy a small chunk of it. And this is our fourth stock, National Aluminium. Let's go for the fifth stock. This is from the mining sector, GMDC. So GMDC is also a debt-free company, and it is like 5-6% fallen from its top, and it's a big company, like 15,000 crore company, a mid-cap company, and promoter holding is around 74%. That means they can take the decision very quickly and can stick to them, and there will be no conflicts in this. Even ROC and ROE is good, like 31, 22%, and 475 rupees is the current stock value. Yeah, again the same thing, it's not a good time to buy a huge quantity. You can have small amount of this in your portfolio. It's a great stock. Like, I have shown you all the five stocks. One was Coal India, which provides coal. That is also good stock, which pays you good dividend. And the second one was VST Industry. It's a tobacco industry company, so it's highly regulated. Even that. So these are the five stocks: Coal India and VST Industries, and next one was HCL Technology, National Aluminium, and GMDC. All are good stocks. It's good to have, like, they give you around 4 to 5% of dividend a year. This year they might even give more because of the run up they are getting, the profits their book is showing. So these are the best dividend stocks you could get at this price. Yeah, thanks for watching, guys. If you are watching, I just wanted to give you an heads up for, like, dividend stocks. These are the few dividend stocks. Thanks for watching.